One of the biggest misconceptions that I hear as a real estate agent is I can't buy a house right now because I need 20% down for a down payment. And I'm here with Megan Maloney with First Colony Mortgage to tell you that that's not exactly true, and I'll tell you why. Megan Maloney has been in the industry for a long time. She's with First Colony Mortgage. So tell us a little bit about you, and then we'll talk about the 20%. And then stay till the end, and we'll talk about how you can get into a home with very, very little closing costs as well. So make sure you watch all the way to the end.
Hi everybody. Again, I'm Megan Maloney with First Colony Mortgage. I have been doing mortgage loans for about 12 years. And this is one of the biggest things that I come across too. This is such a huge deal in our industry that you need 20% to buy a house. I think our parents and our grandparents probably were in a position that loans were just different and you did need 20%, but you don't. There are lots of options with as little, it depends on the loan program that you're wanting to utilize, but there's on an FHA loan, you only need 3.5% down. On a conventional loan, depending on your income, you can do as little as 3% or 5% down. So that's a big difference in between 20%.
How often do you actually see people having 20% down?
It is way more rare for somebody to have 20% to put down unless they're upgrading and they're selling a home to buy a new home because they have money to shift from the sale of their home to the new purchase. It actually probably 80 to 90% of the loans that we do, they do not have 20% down. And where this myth comes from, part of it is I think loans have just changed from when our parents and grandparents were getting mortgage loans, and home prices have changed dramatically too, so that number is much bigger. But is mortgage insurance. So mortgage insurance comes into play on a conventional loan if you don't have 20% down. But you absolutely have an option to come in with sometimes 0% down, sometimes 3.5%, sometimes 5%, 3%. There's lots of different ways that you can get into a house with a lot less money than 20%.
And that's really good for a lot of people who are thinking about moving to Idaho, or if you're here locally to Idaho or wherever you are. This is a nationwide thing. It's not just an Idaho thing that you don't have to have 20% down. If you have it, that's great because there are benefits like the mortgage insurance. It helps your overall payment too.
Right.
But if you don't have it and you're really wanting to get into a home, you still can. So let's talk about the different kinds of programs. So you mentioned a little bit about VA, FHA. So let's talk just briefly about each of those.
We talked about conventional. You can do as little as 3% down, 3 to 5% on a conventional loan. Then FHA, again, 3.5% down. VA loans, as if you are a veteran and you qualify, you can do 100% financing. So you don't have to have any down payment to purchase a home. There also are RD loans or USDA loans. Those are also 100% financing. The house itself has to qualify, so it has to be in a rural area, but your agent Annika or I can look up the specific property and make sure that it's in an RD eligible area. But here in Idaho specifically, we have amazing down payment assistance loan programs. So if you meet the criteria of being able to utilize an Idaho housing loan, you can do as little as 0.5% down on any of those loan types that I talked about. A conventional loan, an FHA loan, RD, even though it's 100% financing, you do still have to have 0.5% of the purchase price in the transaction, which on a $300,000 home, that's $1,500 instead of the whole down payment. So we've got some great options into helping people get into homes without 20% down, with much less than that.
Yeah, that's really good. And obviously a VA loan is for veterans. So you have to be a veteran to get a VA loan. Do you have to have any certain requirements to get an FHA loan?
No, so FHA loans, there are some loan amount maximums that are different than conventional, but you don't have to meet any specific criteria to use an FHA loan.
Okay. And if somebody wanted to specifically be FHA versus conventional, is one better than the other? Does it just depend?
It's going to be dependent on your situation. So some of the biggest reasons why we would go with an FHA loan over a conventional loan is the mortgage insurance. So regardless of if you have a 620 credit score or an 850 credit score, the mortgage insurance or the cost that's added monthly, if you don't have 20%, is the same across the board. So that monthly amount is 0.55% of your loan amount that's added to your monthly payment, versus a conventional loan. If your credit score is like 680 and you still qualify for the conventional loan, your mortgage insurance monthly amount could be 0.75 or 0.85, depending on a bunch of different factors. So your mortgage insurance monthly could be substantially more than FHA, because it doesn't, like, credit doesn't matter quite as much. They're just giving the same mortgage insurance premium no matter what your specific loan scenario is. I mean, that's all going to be catered to you specifically, but usually that's the biggest reason on why we shift from a conventional loan to FHA is mortgage insurance premiums can be a little bit better depending on your credit score. And the opposite can be true too. We would go conventional versus FHA to save you on mortgage insurance. But FHA also has some expanded guidelines on debt to income ratio. So if you have a higher debt to income ratio on qualifying, you can go up to like 53, 54% and still approve, versus conventional, you're kind of stuck at 45. So that's quite a bit of difference.
Yeah.
And you can still qualify for the home.
That's awesome. And so we talked about down payment and that you don't need 20% down, so that's good news. There's lots of different programs, so it's important to talk to a lender to figure out which program makes the most sense for you. And maybe you want down payment assistance. It affects your payment just a little bit, but it can help you get into a home for a lot less versus that myth of 20% down. Because there's also, the down payment's not the only thing the buyer needs to come in with when buying a house. There's other funds that they need, and that's closing costs. So if someone really was strapped for cash and they really wanted to get in the home, and maybe they had good credit, good income, but they just don't have a lot of cash in the bank, how can we get their closing costs covered? Or is there a way to eliminate that in any way?
So closing costs can't be covered in the loan itself very often. So it has to be covered in the transaction. So the way that you add that in is with the help of your agent, negotiate that into the price. So you ask the seller for a credit to go towards your closing costs. So you cover your down payment with either 100% financing on the loan program, or a down payment assistance second mortgage, or your own money that you have, but you ask the seller to give you a credit in the transaction for the dollar amount or a percentage. Typically closing costs, if you're not trying to do something extra with a rate buy down or a temporary buy down, which I'm sure we'll talk about either in this video or another video, you are going to be between 2.5% and 3% on most purchase prices. So I'll let Annika speak a little bit more to that negotiation piece on asking the seller in your contract to pay those costs for you.
Yeah, and we actually do that quite a bit. So I like to work with First Colony because we've got such a great relationship. So basically, if I want to put in an offer for a client's really interested in a house, I'll call Megan or her partner Kirsten and say, hey, here's the house that we're interested in, and this is what we're looking for. We do need to have closing costs covered. They don't have the cash for it. So can they be qualified for a little bit more, just in case maybe the seller doesn't want to pay for those closing costs? Can they be qualified for, say they're qualified for 300, I say, hey Megan, can they go up to 310? And we can work those numbers so that we offer a little bit more in the asking price, so then the seller doesn't come out with less in their net proceeds from the sale of their house. However, a lot of the times these houses are sitting on the market. Right now, a lot of houses are selling very quickly, but there are some that kind of sit on the market, which gives us as buyers a little bit more leverage. And so when that happens, and say there's a house that you're interested in for $500,000 and it's been on the market for months and months and months, we can offer $500 and ask the seller to pay for closing costs, which is only giving them a little bit less. So a lot of people want to, and I've talked about this before, but a lot of people want to offer less than the asking price. Like, well, if it's $500, let's offer $490. They say, well, instead of offering $490, let's ask for the closing costs and keep that cash in your bank. So there's lots of different ways to negotiate how we do that, and it's all dependent on your specific situation. But that's what's so great about working with me and the Anderson Hicks Group and First Colony, because we know all the different strategies, we know lots of different ways to go about it, and every situation is unique. But absolutely, I've helped buyers get closing costs covered more often than not,
right,
in this market right now. So it's really a great option to.
Right, it's such a great tool to. I mean, as we circle back to just our main point of the myth is that you need 20% or this huge dollar amount worth of money to be able to even start looking at houses or start making offers, but that is not true. Working with the right lender and the right real estate agent and getting a team of people to help you in your home buying process, you're going to be able to find out that you don't have to have as much money as you think to move forward. There's lots of ways to build the costs into the transaction, whether that's going up a little bit in the purchase price like Annika mentioned, or you may not even have to. There's lots of, like, that's the point of having an amazing real estate agent to navigate you through. But also we work as a team with you to say, okay, here's the dollar amount we need in closing costs, because that's part of the lending piece is how much that is. And we can either give you, as you're negotiating, a percentage or the exact dollar amount as you're negotiating. So there are so many great ways to get into a house for way less than 20%. Usually, I mean, we've helped a lot of first-time home buyers and they only come in with $2,000 or less and they're getting a new home and a payment that makes sense for them. So there's tons of different ways to look at this and get into your dream home or your starter home or wherever you're at with not 20%.
Yeah.
$300,000 or $500,000.
Yeah, you can get in with a lot less. So I'm so glad we talked about this because this is such a huge myth. Now, I have one last question for you, Megan. As a homeowner, an investor, and a loan officer who's been doing this for a long time, if someone just has it in their head of like, but I want to have so much for a down payment because I want to save on mortgage insurance or I want to keep my payments lower or whatever, why would it be advantageous to buy now if they can versus waiting to save up?
One of the biggest things is that we are in a higher interest rate environment that has stopped a lot of people. I mean, you may be one of those people who's like, oh, I want to wait for rates to come down, or I want to see if home prices are going to go down, all those things. It always is the best time to buy a house is whenever you feel comfortable. Dig into those numbers and see, because there's always a cost of waiting. I bought a house in 2016 and was iffy because I only had 5% to put down. I was worried about it, even though I did mortgages, like just jumping into it was a lot. And that has been an amazing investment. If you would have told me that right then, I still would have thought it was a great investment, but the time of gathering the equity on it, that house now is worth $300,000 more than what I purchased it for, which is unique because the market just jumped a lot. But I kept that house and moved into a new house with just 5% down as well, and kept that house as a rental. So always just dig into the numbers of if it makes sense, because real estate is always such a good investment. It is one of the very few things that is going to continue to appreciate. And if you can make it happen with 20% down or 10% down or 0 down, look into the numbers if they work for you, because it's always a great investment.
Awesome. Thank you so much. If you're looking at buying a house, whether it's in Idaho, another state, or soon or next year, First Colony has an application that's in the description below. You can click that and fill it out, and they'll be happy to answer your questions. It doesn't cost you anything to fill out the application.
Nope.
And they'll give you a call and you'll get these two sweet ladies on the phone to talk to you about your situation. And there's such pros about the lending world. And so if you have questions about that, go ahead and fill out that application, or you can call or text me as well. My name is Annika Wilder. I am a local real estate agent here in the Eastern Idaho area. Thanks for listening, and we'll see you in the next video. Bye.